Hi, good afternoon. This is Adam Tuiaana with RJO Futures in Chicago. Reporting to you this afternoon on Wednesday, February 27, 2013 on the soft commodities markets. Just a quick rundown, starting out with the cocoa, which last traded at 21.23. That actually puts cocoa even on the day, actually down about 2, but even pretty much throughout the day. A lot of bearish and bullish mixed news, but for the most part, most of it coming out of the Ivory Coast. Lately in the Ivory Coast, there's been a lot of political issues. So a lot of violence, a lot of violent attacks, mostly in the western region of the Ivory Coast. Has to do a lot with the current president that is there right now, who is Tuiaana, and then the past president who was actually outed back in November of 2010, who is Gbagbo. So those two presidents, supporters, do not get along. Last time the former president was actually outed, a lot of violence took place, kind of seeing the same type of activity right now. So we've seen a little bit of a rally in the cocoa. And last time that this did happen, which is basically from December, right after post-election, December of 2010 through April pretty much of 2011, we saw cocoa go from $2,800 per metric ton all the way up to about $3,800 per metric ton. So big volatile move. Cocoa can do this very easy. It's a market that's very volatile. So moves like that can be precipitated from geopolitical issues such as these. So watching, keeping a close eye on this. Even with this happening, I think that cocoa still has a huge supply issue right now. Port arrivals still very high, a lot higher than they were last year. So also we have some issues with the euro, the demand in the Eurozone for cocoa. The euro is being affected by all the other political issues in Italy, so that puts some pressure on the euro demand for cocoa. So I'm still, with all this said, pretty bearish on cocoa for the time being. I'm looking actually for it to come into some resistance here and continue to sell off. So moving on to coffee, last trade at 143.20 puts coffee down 30 ticks on the day. Record net shorts, record net short positions on coffee. So there is possibility that coffee will find some support by way of short covering, and a lot of those shorts and those funds taking profits at this point. So I'm not going to really call a bottom just yet. There has been some bullish support in the fundamental side for coffee. Basically coming out of Colombia, first of all, a lot of protesting going on there with the Colombian government from coffee producers, a lot of them going on strike. They feel and are demanding higher subsidies to kind of cushion a weakening currency that they have, which is the Colombian peso. Also, the price of coffee has been selling off for quite some time. So those lower prices of coffee, growers out there really upset, so they're all, quite a few of them are on strike. So that's affecting it. That's kind of bullish in and of itself. In my last video, I did say that coffee would rally up, that I thought it would rally up to somewhere in the 144 area. Today, again, it last traded 143.20, but it did hit a high of 144.90 and then pulled off that high pretty nicely to end up closing down 30 ticks on the day. So it hit that 144 area, and that is the area that I mentioned last time is the 38.2 Fibonacci retracement level. So I thought it would come into some resistance there. It looks like it has. I think there is more down still to come. Look for a break of 132.25 as being your next area of support. Moving on to cotton. Last traded 84.57. That puts cotton up 274 on the day. A very big bullish day for cotton. A lot of strong demand. China coming out with some orders for cotton yarn, which is pretty bullish in and of itself. I still believe in a strong global demand for cotton out there, and also a weak supply going forward. So it's been mixed fundamentals that have given it some choppy price action, but I do look for cotton to break above this 85 area and then continue on upward for on a long-term basis. So next area of resistance is going to be that 85 area. On the support side, if cotton decides to break down, it's going to be the 82.30 area that we'll look at for support. So keep an eye on that. Last but not least is sugar. Last traded 18.05, which is even on the day. This is the May contract. it's been sitting right here. In the past few videos, I've talked about it breaking the 1800 level. It's been sitting here, which seems forever. That in and of itself is actually pretty bearish. I believe that the market's taken a little break from some short covering that we had seen in the past, which prompted a little bit of a rally. Bigger cane outlook, sugar cane outlook for Brazil for 2013-14. That is kind of bearish. In addition to that, the dollar, we won't forget, has been very strong. It's taken a breather, I believe, right now. I think it's going to get even stronger. So that inversely is going to put a lot of pressure on commodities, especially those that have fundamental issues like sugar. So I believe sugar is going to continue to sell off, and I'm long-term bearish on sugar. So that being said, again, this is Adam with FCOJ-A Futures in Chicago. Remember that futures trading does present some risk, and it is not suitable for all traders, but have a great afternoon. Thank you.